So welcome. Today we're going to talk about risk management, one-on-one, how to add, how to size in, how to scale, and how to use proper risk management. So we're going to cover the different price stocks for small caps and the different setups and how much size we should use pre-market, how much size we should use at open for re-ads, scaling, and everything. So important is always when you enter in a trade, define first of all your stop loss, your targets, and your dollar risk. This morning we had VLRX. So VLRX has an history of gap and crap, or pop and fill, whatever you want to call it. And we had a big resistance 370. So whenever I decide to enter into the trade, I know perfectly where is my stop loss. Do I use a stop loss and put it like stop loss order with a broker? No, I use a mental stop loss. Because sometimes we can have like just a spike, a wiggle, room of 1-2 cents, it click and gets your stop loss, because also the market maker can read your stop losses already placed on the market. And then you have the continuation in the direction you are pointing to. So always define your stop loss. What is maximum stop loss that I use for stocks below $5? Generally maximum 15-20 cents. If I'm looking for stocks up to $10, I can move that up to 30-35 cents. Rarely I go over this. The second important thing is to look for targets. Before looking at technical targets, we need to define our risk. So let's suppose that I'm shorting this at 360. Actually, this is the trade I took today short at 360, 358, and 355. Loaded over here and small feelers on the uptrend. Once I click over here, I immediately know where I have to put my stop loss. The resistance was 370 daily. Here the top is 363. So I will cover in a loss, if this reversal goes up, above 363 till 370 into that area. But I know also my target, and my target minimum for at least half of my position or first target, I wanted 2 Rs. So let's say that I'm risking the worst 358 and 370, 12 cents. Then I mean that the first target will be 24 cents. In this case, playing the stock 358 over here, adding more 340. So we can see my, actually I'm gonna make it bigger, all right? So 360, 358, and 355, added more 339, 340, 337. First cover is a very small 327. The first main cover where I covered half was 303. So yes, I was risking those 12 cents at an average of 355 and then added more. So I had an average of 350. My first target where I covered was 3. Where I covered half position, I don't consider this because it was a small one. Half position right here, 303. So I was risking 12 in order to make 47. 4 times more, 4 hours of return. This is the way you have to trade. That's the reason why on longs, I always want to buy bids on support of the J lines or on dips. And when I'm short, I always want to take short on spikes and extension. Never looking to short weakness. That will create the better condition scenarios for best risk reward. So we have defined the stop loss. We have defined the risk in terms of cents. And we have defined also the target, at least 2 R. So why putting a stop above the 363? So I know that the high of the day is 363. But as I said before, we're looking at daily resistance at 370, exactly over here. And we know that into this area here is very possible to have a wiggle room, so like a spike, and then fill again. So often market makers will use this pop above the resistance only to trap first longs and only to make short covers. So they will accumulate more and then they will dump. They will accumulate, as you know, logically short, and they will dump for cover lower. Also, how much to trade? When I'm trading a stock in pre-market, I suggest beginners and advanced traders to not oversize. Always use maximum 1/3, 1/4 of your normal size that you will use after open. The first 1 hour of trading, I will use full size if I have an A+ setup. And after 10:30, I will lower my size. For afternoon plays like late day long setup, late day fade setup, I will use half of my size or 1/3 of my size. Only on a few occasions, I will use my same size, I use it open. This is very important because it helps you to focus on the best risk management. We cannot trade a setup that is not A+ with full size because we don't have the same percentage of odds of probability of success that we will have with an A+ setup. So now let's analyze how to take a trade short and which size we have to use and which has to be our risk management. The first important thing, I'm looking on a preclinical study like this, fader. I'm looking where I should put my stop losses and where I should put my targets. So we know that I will be looking for a tight stop. Therefore, when it opens over here at 287, the first level that I will be looking to stop is 310. So yes, I was looking for 20 cents risk for a $3 stock because at 310 we had a huge amount of bookmap resistance. Also, level 2 was showing over here some size on the ask. That was my risk. When I started seeing this push right away and stuff into the 292, so exactly into this area, then I lowered my trail from 310 till 3. I was waiting to stay in for a downside over here for a backside. It pushed up till 299. I was ready to take off at 301, 302, giving that 1-2 cents of wiggle room. Flushed again, stuffed and soaked and flushed. So once I'm over here and I see that the price is below the J lines, I can think two things. Lower my trail, so from 3 till this resistance, because we have 1 and 2 and 3 time rejection, so 290, 292, and protect your profits. So think this, you are shorting on pops above the J lines, let's assume 288. Actually, my fills were at open, the majority into this 287 and small adds over here, so 287. With 287, the first risk was 310, but also considering I had a very high average over here, 340. So my average at open was 315. I was risking in the money. That's the correct way how to risk. Let's assume that I didn't have pre-market fills. So my average is 287 right here. I'm risking 23 cents, which is still fine, but my target has to be 46 cents. So when I'm looking here at 287, I will be looking then for something like 250 fade, because I always want that 2-1 reward risk. So risking 1 to get at least 2. Once I seen this pop and fail, once I see this rejection, I bring down right away my stop. So I have now $3, 287 filled 13 cents. That means that my target will be not anymore 250 and lower for 46 cents, but will just be 26 cents. So 287, I will be looking for 260. And over here, again, push, comes down, and once we are below the J lines into this area, I lower more my trail, 292. In this case, I'm risking something like 5 cents. So always keeping that 260, 270 as target, more than 2R. So now I'm getting paid much more than 2R. That's the reason why many traders lose, because they don't look at R return. And once this gets another rejection of the J lines over here, 285, I will then lower my trail at 286, 287. As a matter of fact, when this came up, I covered the majority of 293, holding 1/3 position. Now we trail at 3. Why at 3? Because I still want to give a little bit of wiggle room to go down. My average right now with the ads is 305. So I covered this 292 in the money, and I will cover the rest at 3 in the money. This is the correct way how to play risk management. Now we have to look also other patterns and also where to add and scale, which is a very important matter in trading. So we're going to look at VLRX always, but on the 22nd of May, 2019. So with, let's see over here. I'm going to use on demand. VLRX. Let's put a couple of days more. All right. We're playing this pattern. Pre-market high, we start seeing a distribution pattern. So you can clearly notice this pattern. Sketchy recycle news, open high, pre-market low. So knowing that we're playing this trade and we're having a history of gap and crack, sketchy news, distribution pattern, unloading already in pre-market, we'll be looking for a pop and fill of the J lines on the 1 minute. So these are the levels that I will be looking for. So the J lines, the resistance over here of pre-market. So this 550, also $half number. I will be looking for the 200 EMA, which is this dotted over here, 200 EMA on the 1, and then the 1000 EMA on the 1, which is a 200 EMA on the 5. So these are the 3 main levels that I'm looking for. As you can see, the 200 EMA on the 5, which is a 1000 on the 1, as one of our last targets is not down here today, but is up here. So this I won't consider. What happens over here, the open? Where to put my stop? And only if I have the setup, I'm going to enter. So when the trade opens over here, started pushing, and right away rejects on heavy selling pressure. So exactly at 514, 511, 509, I'm going to short, risking this level over here, 550. So I'm playing, let's assume 510. I'm playing in 40 cents risk, which is a little bit too much comparing to my 15, 20 cents for $3 to $5 stock. And what I will do, I will then lower my resistance and also level of stop at 538. So above this prior relative high. In this case, I will have 510 and 538, 28 cents risk. Much better than to have 38 cents risk. Over here, you can see that if I want to enter, I'm not going to enter, and let's say my position maximum will be 1,000 shares. I'm not going to enter 200 shares over here, adding 200 shares later on the breakdown of the J lines, lower and lower and lower. Doing like that, I will only have a lower average and a worse risk reward. Why? Because I'm going to risk over here, if I have my total fill at 510, something like 28 cents. Let's assume that we'll start adding on the coming down over here, I can have like 50, 60 cents average stop loss, because that is the line that I'm looking for stop loss. So 1,000 share into this level over here, assuming my risk, and right away know that 1,000 share, $280. You have right away to look at your account if you can afford to lose that $280, if that $280 won't be more than 1% of your account. So if you want to trade to make some money, always know what percentage are you going for to gain if you will have a win, and what are you going to risk. So if we risk 1% maximum, then we're looking to make at least 2% return on our account of this trade. So $280 risk, 28 cent risk. That means that the first target has to be 56 cents. Not going to take profit at the 200 over here. Why? Because basically this area over here of our entry is 1-to-1 with our risk. So I cannot trade something 1-to-1. You can see it from here. That means that the first target I'm looking for will be at least 2R. That's the way how you make grow your account. So 2R, 28 cents below 510, 56 cents. So we're going around 460 level, exactly over here. This will be our target where I can scale out half of our position or 1/3. Just cover, pay yourself, and then we can decide to chill the rest with the 1-minute J lines. So we're getting over here, let's make some drawing. We're getting over here 1R of risk, 2R of return with half position. So where to scale out? Using the J lines, and where to add. So here we have distribution pattern, we stay in. Here we have another distribution pattern, we stay in. And once we start having this area over here, so a pop and fill, the first pop and fill, the J lines had 1/2 of what you covered. So you cover 500 shares. I don't personally add more than 250 shares, because if I start adding all those 500 shares, my average that I have a 510 will get too lower. And how I will manage the position? That 510, I will be trailing, that 510, 500 shares, I will be trading with the J lines. And this 250 shares that I'm adding over here, I will use trailing with the prior level of resistance. In this case, the prior level of resistance is exactly over here. So whenever we have a resistance overhead, that will be my risk. Shorting over here into the 3, let's see better the price to be more precise and clear. Let me take off this. Shorting at the 310, risking this line 335, I will risk 25 cents in order to make at least 50 cents. So 310, I will look for 260, down here 280. And if I don't have any opposite direction, like in this case, I will be trailing all the way. So first rejection of J lines to add half of what I covered. You can see a micro distribution pattern over here, which gives you also the confirmation of the pattern. You can see that at the second rejection, we don't have a curl up. You can see that doesn't curl up. Over here, instead, we have a curl up because it's starting to making higher lows. You see this curl? So this over here is your trailing. Yes, we didn't get 2R of return, but we have an exit signal, so we must take it. Always for the ads. Day after, you can decide to continue to hold your fill from 510 over here, and you will cover lower than $2. So this is the proper risk management. Shorting 1,000 full size, at 2R taking off half or 1/3. This is, for me, generally is like 1/3 of my position if I have a high forecast of failure. Adding half of my covers over here, looking always the J lines to add. Here, the second one, looking for rejection, but I don't suggest to go add on the second rejection J lines. And then when we have a curl up like this on the J lines, reason to take off the ads and only lower your position from 510. Where to exit the position 510? So once this trade goes down, trail with the J lines. So the first trail will be this level. The second trail will be this level. So if we have this push, we're only getting out if we breach this level over here. That's the breach of the J lines. Day two doesn't touch, another 60, 70 cents to the downside. So the second setup we're going to cover is extension at open. We can see over here on the left, TNXP on the 13th of May, 2019. When we have this setup, we're looking for right away a pop, exhaustion, and fail. And we can see that the J lines over here don't have a pop and fill, but this goes directly up. So it extends above the pre-market, which is over here, pre-market level resistance. And we have an extension. How to trade an extension? We need to look for a daily resistance. In this case was 250, touched many prior times. We need to look for a pivot, half or whole dollar number, and we need to see for sellers jumping in. So whenever I'm trading an extension move, the first target I'm looking for is always the J lines. But I need a very precise entry, and I need always to define my risk and R of return. So over here we have the price pushing, pull back, secondary push, pull back, and we can see over here that we start having inside bars. If I zoom out a little bit, if I do like this, you will see that we have a pennant. So this pennant tells me that on the breakdown at 239, I want to get short, risking 250. So only 11 cents, exactly over here my short. And my target looking for 2R. So as we said, the first target is the J lines. So 238 and 226 is not 2R return. We need more. That's the reason why we stay in. We're looking for a 2R return, 238. Then will be something like 220, 214, 212, which is down into this area. So 12 cents risk means 24 cents reward. 239, we'll be looking for exactly 217. Goes down, pops again, another push. Here, we don't have any kind of big buyer. You can see the volume is below 150K. And then right away, we have a seller, also inside bar, this bar over here, and another inside bar. So we have a distribution pattern. exactly over here, which tells us continuation to the downside. Breach the J lines, and we get around 219, 220. Reason to take off half over here. Why? Because this is your 2R of return that you're looking for. So take off 1/3 of half position, and then look to lower your trail. So first stop was this one. Then we have to lower. Where I'm going to put the stop? Generally just above the J lines or the previous resistance. And I can see that we have a previous resistance into this area. So this area over here comes down, gets back up, and this is how you want to trail. So looking for a curl, as we saw before on VLRX, on the J lines, to take off. Exactly over here. Position, take off half or 1/3, and when it curls up, take off everything else. So when now, where to enter? We need a possible re-entry to take the short, but we need a clear breakdown and rejection. And we can see that over here, the price is just like over, under, over, under, and so on. Only when we start failing on volume and having this first rejection over here perfect, then our trade is short over here. We're to put our stop, as we said before, at the previous resistance area. So we're short in 223, reason to take off into this resistance at 231. So risking 8-10 cents. And then we will be looking for at least 20 cents of return. And we can see how this goes all the way down. How much size? Over here, we have full position, scale out 1/3 or half, take off everything. And then over here, being that we have no more position and we have a set tight risk, this is also an A+ setup, risking just the prior resistance, rejection of J lines. So I will again take all initial size. Let's say 1,000 shares like over here. 1,000 shares at 2 hours of return down here around 2. I will take off half of my position and then trail the rest with the J lines. So when this will come up. So this is the correct way how to trade extensions on small caps. Let's look now long plays and how to use risk management. Solo. So over here we can see what Solo did. Was a micro float, big flow rotation stock, trapped everybody below the VWAP in the morning, then pushed all the way up. This moved for more than 400%, went from 130 up to 675. And let's see on the 1 minute what happened. And how to use on long plays risk management. Get up on news. So not a lot of volume over here, pretty liquid. But this manipulation still had to come. You can see over here we have no patterns, no distribution pattern, no curls up, no cups, nothing. Price opens with a small gap, pushes above the J lines, fails below VWAP, holds the J lines. And over here we have a first support. How we can see the support, look how many times this holds this 163, 164, starts curling over here. And our long is when we have this curl up breakout. So exactly over here. 173, risking 163. So 10 cents. That means that for long plays, the first exit will be half at 20 cents. 173, I will be looking to give away 193 half position right here, and then put my stop to break even once this comes down. Why? That's the correct way to do it. Often you will see this small pullback, doesn't get to the level of break even and pushes up maybe another 200%. But if it pushes down, you cannot risk your profits. So being conservative, you will want to get out break even 173. Giving a little bit of wiggle room and use the support of before, you will use 163. Personally, I like to get out break even and look if I have another re-entry signal. So 1,000 shares over here, take off 500, rest break even. No adding and scaling over here. Now we're still looking for the J lines. We're still looking if we have that curl. And over here we can see another curl, J lines up. And over here we have a breakout. You can see how this over here breaks. And exactly at 179 with stop at this level. So 167. In this case, we're risking 8 cents. We'll need to make at least 16 cents. Goes up, down, bounces on the support, second curl. So if we enter 179, we'll be looking for that 195, 196. First exit, exit half. Now you're prettying the gain, extended from the J lines, so you can still use the break-even level as trailing. So we'll put this line only to define our level, 179. And we have to look where to add and scale and how to use risk management. Second dip after our entry. This dip is very important because it's the first dip after our entry. And this is the first add only that I want to take. So once we have a dip, and then we have this curl, something like a cup, like this, curling over here, exactly at 198. I want to add. So if I exit over here, 500 shares, I will add 250. But for this 250, my resistance support level, in this case, support level of risk, will be just this, few cents. So long in 198, risking for that 187. I'm not risking the same level over here, 179. This is how you have to manage this position. This one over here, we're trailing with stop to break even still. This one, second entry, add, we're trailing with the J lines and the support just near the J lines. Once this push, I then move my trailing from 179 break even on the main core, so the main position left, to this support. We push up, we push up. Remember, 2R of return will be up here for, will be $0.08, 198. We'll be looking for, over here, 218 for exit half or of this add. And then you will look to trail this to break even. And this you will lower at this level. So over here, you still have a hold and a hold and a hold, but I'm not going to add more because this is a second, third, fourth bounce on the J lines. Holding this, we have a breakdown over here of the J lines. We don't have a curl down, so reason still to add. So our entry that is an average $1.90, $2, you will sell only the day after once we have this breakdown, curl down over here at 578. So this is the correct way how to manage and trail using the J lines, using your targets, and using a correct risk management. What traders don't understand and it's the basic of being profitable, is always to measure the risk in terms of commissions, in terms of fees when you're short, so hard to borrow stocks, and in terms of return. So I will never trade something like solo long if I know that at $2, so not even 2 hour, I have a huge amount of overhead resistance, and I don't have that 2 possible R of return for my trade. So that's one of the most important things I will always keep in mind. Now, we're going to look at VLRX, so live trade right now. So this is how we trailed this today. So as we were saying in the beginning, first risk was between 363 and 370. We lowered this down 310 at open. Then we lowered at 3. Then we lowered 292. We lowered 285. We trailed half at 292, so just above this. Rest at 3. Didn't get at 3 the final trailing. So we're still holding over here. Is there any reason why I should add over here? No. Why? Mid daytime, so between 10:30, 1 p.m., 1:30 p.m., we have algos in place. So I don't suggest to add or skill anything, only respect your plan. You can see that we're holding the 200 GMA on the 5, which is a 1000 on the 1. We're looking for this breakdown, looking for that 258, 260. So what I will be doing is to observe this level down here to see if we have any kind of other push and rejection. And if we breach below the 279, 280, looking for the J lines as the last trail of my last part of my stock. So work for you traders is to analyze your 2-3 setups that you're trading for small caps, big caps, for long or short. Put your technical levels of stop loss, of target. Also, do a plan of sizing and of position size for stocks below $2, so between $1 and $2, from $2 to $5, and from $5 to $10. This for the small caps. For the big caps, whenever you have something like Tesla, Netflix, Facebook, between $150 and $350, you can use always the same amount of size. So this is your work. Then analyze also what are you going to risk with the worst stop loss possible in terms of dollars is always important. And how much that stop loss, let's assume is 1,000 share with 15 cents, so $150 risk, how much that is in percentage of your trading capital. Thank you very much.